This is the opening range for Friday, May 20th. Lots to cover today. We're going to do the easy one first. Dow hit two pivots. First one here was a win for both 25 and 50. Second one here, just before 11 o'clock, was a loss for both. The way that I do it is I don't enter a new trade that I'm not already in, which we'll get to in the other indices in just a minute. But so this would be after 11 a.m. So I would not enter that, even though that this was the most safe trade on the 25%. But the entry, the original entry, is after 11, so I wouldn't take it. If you did, though, you did win, took some heat, but eventually it got to where it needed to get, and it would have been worth 29 points. But officially, that is not a trade. All right, next we're going to look at the NQ. NQ had a trade here, which was a win for the 25 and a loss for the 50. So this second trade was a loss for both 25 and the 50. So this third trade would be both a most safe 25% entry and a most safe 50% entry. This trade happened at 10:59 in about 5 seconds. So again, my deadline is 11, so technically it's before 11. However you want to do that, we'll get into more of that in the S&P one here in a second. But if you did trade that, it came up, missed the exit by about 4 points. You needed 15 and a quarter, got 11. So you would have lost. You would have entered an additional contract here. Since you're already in the trade, you can enter after 11. And in this case, doing so, you would, if you were trading the 25%, you would have entered 3 additional contracts and you won fairly quickly. And then if you did just the 50% most safe, you just added 1 contract and you got your 50% win there as well. So a break-even day for the NQ, however you slice it. But if you didn't want to trade because it was at 10:59, you would have just not had a trade today and broke even the same way without all the heat. All right, next is the S&P. All right, here's the S&P. First trade here was a loss for both 25 and 50. So this would be a 25% most safe entry, and both won. The 25% most safe was worth 2.5 points. Now we get into something a little tricky, which I'll go over a lot. So at this is 1040 bar, 1041 bar. This is what I sent to a client of mine via Skype. That we'll see how the next 10 minutes plays out. Nice looking 1 hour bar, which I'm going to show you in a second, for potential crash down to the opening range low from yesterday. So over the last many months, we've talked about the 11 a.m. bar being kind of crucial in the sense that if you have a very small wick on the top, or this could go to the upside as well, but in this case, it's a down trade. The last 10 or 15, 20 minutes can really move it quite large. And I'm going to show it to you in a 10-minute chart here in a second. Well, let me go back to the 1 minute here. So that was what I posted at 10:41. So there you go. So basically looking for it to come down to the opening range low from yesterday. The opening range low is the orange red bar here, which it did come down to that. But right here is the next trade, or the next pivot hit, I should say, which is at 10:50. So this next pivot hit is at 10:50. It is a loss for both. The next trade here would be at 10:56, right at the opening range low, basically, from yesterday, which is what I talked about. But the let me show you the chart. This is a 10-minute chart of the S&P. So this is the wick that it has. So if you draw a little wick right there. But this is a red candle. So this is 1010, 1020, 1030, 1040, 1050. So this is what we're looking at for the hourly bar, what it may be, which is already a sizable down bar. And if we switch this to a 1 hour chart, you can see that it fell even greater, but that was a significant down bar as it is. And what I mentioned before, like I said, when you have days like this where you have the previous bar is in the same direction, so in this case it's a down. Again, this can go for the upside too, but very small wick, so not a very big wick compared to the body. Those last 10-15 minutes can really move the market. So if we go back to the 10-minute, this is what we're looking at 10:50, which again was right here for the third trade, or third pivot. So that's not an entry, but that's a third pivot. It missed the 25% win by 2 ticks, not 1 tick, but by 2 ticks. So if it would have hit it, this would have been a win, and this would not have been a trade at all. But anyways, this was a trade officially at 10:56 if you decided to trade it. Again, late in the day, etc. But that would be a losing trade. So you would go into the 11:07 time frame, which also missed. So you, in this particular case, this would only be an entry on the 25%. So this would be your entry on the 25%. You're looking for 2.5 points. Didn't get it. This entry you would add 3 additional contracts. You didn't get it. You got 2 points. You didn't get the 2.5, which would have been your break even. And then if you chose to, so that is 1 loss, 2 loss, and then if you did additional contracts here, you won and did that. Now, the 50% did not have a trade, so this would have been the first 50% trade, most safe trade, which is after 11 a.m. So you would not enter that particular trade. However, if you did, you would buy 1 additional contract and you won here. So some close things, some things to monitor. However you did it, I lost some on one particular account. So I lost a good chunk on the S&P because I was over leveraged and the market fell and I didn't listen to my own advice here and all that stuff. So, but officially the S&P most safe 25% won one of them, and then depending on how you traded it, you either got hit pretty hard because of this down move, or you broke even after a while, depending on what you did. Or if you did it based on the 2 ticks, again, I've talked about 1 tick before, where if it misses it by a tick, I'm counting that as a win. And if I do that, that's a win. This is not an entry. And then this wouldn't be an entry because it's after 11. So if I counted, so if this went up, instead of missing it by 2 ticks, only missed it by 1 tick, I personally wouldn't take this one, even though it's before 11, because this was quote unquote a win, just missing it by a tick. So however you slice it, again, it's trading, nothing is exact science, but I wanted to make you aware that that is something to watch for. You will see these multiple times, and just wanted to show you another example of what I'm talking about with this. This is a 11 a.m. bar, so 10 to 11. This is on the NQ. This is from May 10th. This one didn't cost us in particular. The wick is a little bigger than I'd like to see. This is a down bar the hour before, but not by much. But it didn't cost us. But anyways, we had an entry here about 12.30, or excuse me, there was a pivot at 12.307. It wasn't an entry, but because it had won previous trades an hour before. But as you can see, that was a very big down red bar. If we didn't have the rule of 11 o'clock time frame, this was a loss. So you would enter at 11:03, which would have been a loss as well, and then you would enter again at 11:09, which would have been a win. But So watch for that. Watch for that big bar again. It'll usually show itself, so you can see this one. 1047 was 12307. Got down as low as. Let me put the thing up here. It closed that bar at 269. So in those 13 minutes, and it got down as low as 255. So it dropped, 50 points in those 13 minutes, and at one point. So watch those particular bars. These are the days you need to avoid in order for the OPR stuff to work. You have to avoid the big down or losing days, because that can obviously wipe you out. But hopefully this is helpful. Have a great weekend. Feel free to leave any comments in the comment section. Take care.